That's the plan. Plan is we have three of the brightest young minds in mortgage banking, which isn't saying much, but it's us three leading the way.
I
We'll let
love the way you roll. It's just like, it's
That's
gonna
a
be what
very
it's gonna
backhanded
be.
compliment, but I'll take it. Thank you.
I it is. But it does we want to be authentic here. So
What do
anyway,
you got? What's your sign?
mine's a Libra Scorpio.
Okay, because Jeremy and I are Pisces guys, and so we just kind of flow with it.
Go with the
Oh,
flow.
well, that's in my yoga class yesterday. That was the topic of conversation. So it's good for me.
Jeremy, that means your birthday's coming up. What is it?
Yeah, the 11th.
The 11th, and I'm the 19th.
The
So
11th.
You're March 11th?
Yeah,
Oh my gosh, my brother's birthday is March 11th, and one of my best friend's birthdays is March 11th. This is
right on.
funny.
Well,
Sorry,
good. It's
Robbie,
meant to
when's your
be.
birthday?
don't worry about it. Not March 11th.
When is it? You don't
March
want to tell
March
everyone?
19th. March 19th.
Okay.
Uh, so is it? We'll get to our topic du jour here shortly, but is your golden birthday considered like 22, 33, 44, 55? Do you have like a golden birthday every 11 years, or what does golden birthday mean?
Just the one that matches the age. So yours would be your 19th, I
Oh,
think.
okay.
Wait, that matches your
But
age.
meaning you turn
Oh,
19 on the
19.
19th, that's your golden birthday. So my 11th would have been technically, that's how I understood it. But I like the 11, 22, 33. That would be fine for me too. I'll
Yeah,
celebrate all
yeah. Because we've all missed it. So
Yeah, we've all, exactly.
Hundred things. Well, everybody, welcome to Mortgages with Millennials. I'm Robbie. That's Kristin. And if you can read, which I think you can, that's Jeremy Potter. We're very pleased to have with us today. We're going to chat customer experience, kind of where companies are, how companies can differentiate themselves. You guys are going to have to pardon the background noise because I'm here at Hartsfield Jackson Airport in Atlanta. Uh, so I will pick up some stuff from the intercom. We're
it's
gonna keep
not
it
bad.
minutes today. Okay, cool. Zoom is actually amazing at blocking out background noise. People always worry about it when I'm doing podcast interviews with them, and they're like, "Oh, my dog barked," or "There's a lawnmower." I'm like, "No, Zoom's really good." Uh, we'll keep it to 30 minutes today. I want to talk customer experience. It should be a slight continuation of conversation Jeremy and I had with Melissa Langdale yesterday. Uh, but before I start, a big thank you to FormFree for sponsoring today's show. Very happy that they decided to come back and do another year of sponsorship with us because they're doing some really innovative stuff with their passport and their Ricky and getting borrower data and helping qualify borrowers that maybe wouldn't qualify otherwise, finding ways to work deals, things of that nature. We're gonna do an authentic plug here and put them on the spot. Jeremy, what is your take on FormFree and what they're doing?
Yeah, so I've always been a big advocate for returning the power to the consumer in any way we can. And I think lead gen has gotten complicated, it's gotten expensive. And the more you can give a consumer, a home buyer upfront, everything they need to know about their credit and about how much they can afford, the better everyone's going to be. It saves everybody time, it saves real estate agents time, it saves mortgage lenders, mortgage loan originators time. And then the consumer feels empowered, they feel more confident. So to me, FormFree's definitely leveling the playing field to your point. But I also think that empowerment is a really powerful piece of moving forward in this industry.
Of course, I'm on mute. Well put. So Jeremy, the other thing that I would ask of you is, can you kind of bring the audience up to speed on what we were talking about yesterday when it comes to customer experience and winning business as a result of that?
Yeah, there's
Whether it's a real estate agent or referring a client, whether that's a broker dealing with a client, there's different ways that we mean it. But what's your take?
Yeah, I mean, you just framed up the challenge for mortgage lenders and banks in a really good way, which is who are you trying to serve? Because you could actually even identify three categories if you wanted to. We have the consumer experience you just mentioned, you have your team member experience working the loans that you mentioned, and then you have referral sources like real estate agents and others who send you those consumers. You got to make really hard decisions about how you invest in which one of those categories and which investments like a good Venn diagram might overlap and benefit, let's say 80% of the investment would benefit all three, potentially, but it's never going to be perfect. And so I think what we were advocating for, or what I tend to advocate for, is, hey, take a look at your culture and your brand and your experience, and actually be honest. Are you serving loan officers? If you are, that's where your investments are going to go. If you're serving consumers in a more digital way, that's where your investments are going to go. So we kind of ended the conversation with, show me your incentives and I'll show you your outcomes. Your incentives are to make loan officers happy. That's going to be your outcome. And it may or may not have a great experience for the consumer. Hopefully it does, but that's not actually a one for one. It's not automatic. And then if you're investing in a digital experience for consumers to do more and be engaged more, that is going to put different types of pressure on your operations and on your sales folks. Be honest about that. But that's where your incentives are. So that's where your outcomes are gonna happen. And I think those, I always love, especially with Kristin, to talk more about like what consumers should experience ideally. But the reality is, for people watching this, lenders and tech companies, it's where are you going to put your investment? How are you going to solve these hard problems over the next couple of years?
Such a good exercise. I love that. I would encourage everyone to really think through that. I would love to hear from the audience who feels comfortable sharing, like, what are some areas of your customer experience that you think are going really well? Like, what do you think is it could be as small as the conversations you have, or the way that you have those conversations, or as big as, like, tech that you utilize. And but I think it would be helpful to, like, hear from others what's going well before we talk about what's not going well.
And Jeremy, my thought hearing you is, are these investments, they shouldn't be mutually exclusive of one another. You make it almost sound like you have to focus on one. You can't focus on all the different experience areas. Or am I wrong?
I definitely don't. Yeah, I don't want to go so far as to say it is literally exclusive of each other. There's definitely overlap. But for some people that watched yesterday, this will be a stat that they heard. But Kristin, one of the stats that I was using that comes from a large nationwide retail lender that wanted to do a digital processing and closing platform. And in order to do the digital processing and closing platform, had to invite the application to start digitally in order to close digitally, right? Pretty straightforward. And when they placed that question in the workflow of the loan officer or the branch manager, they got about 30% uptick in people saying, yes, I want the digital experience for this application or this customer. When they moved that question out and presented it to consumers when they were setting up their account and logging in to set up their application with the process, they got 70% adoption simply by changing who they ask. What type of process, what type of closing do you want? And so to me, that's what I'm talking about here, Robbie, which is who you ask is who you serve. And if the consumer says they want it, everybody else is just going to have to deal with it, but they might not love that they have to deal with it. So as a leader who wants to transform the organization forward, like, who you ask, when you ask them, how you ask them will actually dictate some of your outcomes and how your cost per loan, in consumer experience, and ultimately in your like NPS satisfaction scores.
Yeah, and maybe it also depends on your customer acquisition strategy, because and I made this point to you previously, if a customer is working with a company, I don't think they're going to jump ship mid-process because the experience sucks. They're going to kind of tough it out. Maybe they'll change if they can get offered a better rate somewhere else. But when it comes to, they've started the process and they've gone through document uploads or whatever it might be, I don't think that we're at the point where customer experience at the forefront of borrowers' minds to the point that they're actually making business decisions based on it, or choosing who they go with. Now, maybe that's short-sighted to me, and it's more like, if they're working with a realtor, or if they're working with anybody that refers a lot of business, that customer experience then will make a big difference in that referral business. But for someone off the street, I don't know how they tell this was a good experience or this was so bad that it would make me go somewhere else. Are we there as an industry, you think?
It's a great point. I think you're right, because, and Kristin, I'd love to hear your experience with the amount of data you have to provide. And we're trying more and more to get that to be digital data directly from the bank account, directly from asset verification and employment verification platforms. But the bottom line is you have to log in, you have to provide stuff. And once you've done that, it is a real pain, a huge barrier to then go somewhere else and do it all over again. That is not transferable data, as we all know. And so, Robbie, I think you're right that the only time it really becomes someone pulling their application is if a mortgage broker in the wholesale channel or a real estate agent says, this isn't going well. I've given you enough time to go with your guy, pull it out and go with my guy, and we'll double speed, we'll go urgent rush to get it done with my person. Other than that, nobody wants to redo an application. So it really comes down to these questions in the future of how are you getting consumer data in faster and attaching it earlier so that you really do create that relationship and that experience where they don't want to leave or in some cases can't leave. But the bottom line, Robbie, is what we know from surveys, from consumer sentiment is even though I didn't pull my application, I had a terrible experience. So even though I stayed with you and closed, I didn't like it. I end up having a bad mortgage experience and I end up telling everyone that mortgage is still broken. It's still backwards. And so that's where we are today.
I think that's absolutely fully agree with all of that. And when there's pain points, like there's the initial aspect, but I have a friend who's living with me while she's shopping for a home, and she just went through this process of, she'd done all this work with another lender and then been just having a really hard time with them and communication and all this stuff. And then I was like, why don't you just talk to this other person? And that person, in the middle of a bidding, war situation, like gave her a bunch of scenarios and walked her through using Mortgage Coach and had just like a wow kind of moment. And then she doesn't mind at all completing all the new things, and filling out her information again. But it was because there was a pain point already. So I think that, that's going to be less common that someone then has the referral to move over.
We have a comment in the chat, or two comments in the chat. Oh, Jeremy responded in the chat. Kristin, can you read it out loud for people and weigh in?
Yeah, we found information updates to be very successful. Yeah, our point of sale provides updates as the loan process progresses. We find these auto updates combined with personalized emails or communication to be most helpful for borrowers and referral sources. Absolutely something I've heard like across the board, that this kind of transparency, responsiveness come to the top of the list of top customer experience, demands. And then Jeremy, you were talking about the Domino's pizza tracker for loan apps. Do you want to speak to that at all?
Well, Domino's was founded in Ann Arbor, Michigan. So when I moved to Quicken Loans in Detroit, we actually talked a good bit about the Domino's pizza tracker. And I think I've seen various points of sale or other types of lending mortgage systems that now have the step-by-step milestones. You're here, you are here. And I think everyone loves it. I think that's a universal truth about consumers. I think the question I have is like, has there been anything more influential in mortgage than the Domino's pizza tracker? It's like a literal driver for a lot of how point of sale, Blend, and others were created. It's how Qualia tracks your closing on that side. I've seen their screen. And so I guess my question is now that a commodity? Is that now like sort of you have to have it? Or is it still a differentiator? I don't actually know the answer to that.
I think consumers expect it. And so when you don't have that, it is a disappointment. And so it is a commodity, but it's not necessarily seen that way, I think, in the mortgage industry. But for consumers, if they don't see that, they're like, what is going on? Why am I completely in the dark? Even if you're sending out emails, like that's not enough, I think, for consumers. They want to be able to log in at any moment and see what's happening. So yeah, I love that.
Flip side of that, though, the flip side of that, my buddy that I stayed with here in Atlanta, he's like, ordered a pizza from Domino's the other night, and I was religiously tracking it on the tracker, and I showed it pulled up to like my neighbor's house instead of my house, and I freaked out and I started calling Domino's because it said the order was completed, and so I wonder if it introduces this, like with mortgage, it introduces this whole other it was almost like LOs are these protectors of the there's them having like a barrier to the borrower, like in their minds gives them value and gives them power. And so I wonder about handing over all of that where the borrower can see things, if there's any drawbacks to it, or if mortgage companies seem like they're doing less of a service. Jeremy, you're kind of nodding, but I don't know if that was a great example.
Well, I'm nodding because I've always taken the position. So I think you're right to frame it up exactly how you did. That is how I think it feels. That tension is how it feels to salespeople and how it feels to MLOs. I guess what I would say is like game on. If you think your value is just transmitting information, then it makes me think of that. I'm an elder millennial, admittedly, but I'm still a millennial. That old Office Space scene where the guy's like, I take the specs from the customer and I give them to the engineer. It's like, well, if that's all you're doing is taking information from your system and giving it to the customer, I don't think any mortgage pro is going to say that's their value anymore. They're going to say my value is all of the things I do to bring that lead in and make that person feel confident applying. So I'm not anymore worried about being the update system. And I think most mortgage pros are like, if that's all you are, I'm gonna pass you, I'm gonna beat you. My company's gonna outperform you because we focus on other things of value.
Yeah, I think we shifted from the loan officer being the center of the transaction to the consumer being the center of the transaction, and that feels uncomfortable and still, and I think will always feel uncomfortable to some degree. But if the consumer doesn't have a feeling of empowerment, as you were talking about earlier, then they're not going to feel like they're confident in you either, So it's and lack of confidence, actually, where I'm about to publish the 2025 Next Gen Homebuyer Report, where we survey 1,000 millennial and Gen Zs, and confidence and trust, where like they dropped significantly just over the last year. And I wonder why, and I would be curious what you guys think, why that continues to drop while technology use continues to rise. I mean, there you would think that maybe there would be more confidence, but maybe with the amount of and these are people that are not necessarily going through the process, so that might be some of that lack of confidence, but still, I think the more that we can support consumers to build their confidence, the more they're going to feel comfortable referring you and staying with you.
Yeah, I think that's really interesting data. What comes to mind for me is we still don't have a great structure, and I'll use incentives again because that seems to be the word of the day. We don't have a great incentive structure to work with people for a long time until they become a lead. We are still locked into a infrastructure and an incentive structure where we wait until they're transacting, and then there's a flurry almost of like a fight. I often think of it as like the Looney Tunes cloud of dust and dirt while like two characters are tussling, and then out of that somebody wins the lead. We wait for that instead of trusting. We need to trust that we can connect with a consumer early enough and it will pay off. But I think there is still a 90-day mindset, a 60-day mindset at a lot of companies because that's all I can afford to focus on. I can't afford to expand my aperture to a year. And until we do, I don't think we're going to have customers that feel really partnered with a brand or partnered with a tool that represents a brand.
Totally agree. Yeah.
It's so funny you say that because when I talk to really, really high producing originators, and I've interviewed some of them for my podcast, and I'm talking, top 5, like Scotsman's Guide type, they are nurturing leads for years. Checking in, hey, sending holiday cards, doing that sort of thing, which is a market difference from what you're talking about, Jeremy. And I'll go back to Kristin's question about trust in a minute, but I want to ask you quickly, is it on the originator? Is it on the company? Who is it on to nurture leads for longer than 90 days, in your opinion?
I think it goes back to what Kristin was saying about being honest about what type of technology and what type of culture you build and that you support and that you invest in at your company. So I do think it is a little bit of company by company, it'll change slightly, but I don't want to use that as a cop-out. I think what you're talking about is exactly the difference between the top tier and everybody else in terms of this industry. And also, you were asking a little bit about consolidation the other day, Robbie, and I've started to put together a theory that I don't think we're going to see consolidation the way we thought, which was the actual small to mid-sized companies go away, which is what everyone threatened. You went to MBA 5 or 10 years ago, and the MBA conferences were talking about consolidation of that type. What I'm talking about, what you just alluded to, is The consolidation is going to be the bottom third of producers at every company that don't do these things. Those are the ones that are going to get consolidated. So the company will stay, but the amount of LOs will do, fewer LOs will do much more business because they figured out how to scale themselves with nurture campaigns, marketing tools, and AI. They're going to be the ones that just eat up that volume. And so we'll see consolidation that way.
And I would think too that that'll drive down the cost per loan file. If some of this headcount can get reduced, you can get economies of scale across less producers. Maybe that's the way to do it. My thought when Kristin talks about the trust aspect is, you know, as things get more technologically advanced and people feel like they're dealing with humans less, maybe that's where you're seeing some of it start to change. And I think that we've seen, you know, humans are obviously a lot more trustworthy than machines, but machines are a lot more accurate than humans. And this kind of AI
Well said.
wave we're going through, you know, and it might take, we might be talking about AI for the next 20 or 30 years. You know, it'll still be the hot topic for the next 20 or 30 years, but it should make it to where it improves the confidence people have in machines, and it improves the accuracy that humans have themselves based on the data that they're getting and things of that nature. So I think it's a good trade-off in both directions, which, you know, everything I just said is pretty optimistic about the future of mortgage. I think that'll help get some costs down, and I think it'll help instill more confidence in consumers. I mean, I think we're trending in a really good direction. I would say, Kristin, if you had data from 15 years ago, think about how much more enjoyable it is for people to get a loan today, or you know, whatever satisfaction. Like, it's got to be night and day. It has to be.
Yeah, absolutely. I mean, I think it feels that way, just as I'm sure many people feel this, of being in the industry like 10 years ago. What was that experience like versus today, depending on, I guess, who you're working with. But I think it's incredible. And to your point around AI, that this was something new that came up on our research this year, was that 34% of millennials and 43% of Gen Z said they leverage ChatGPT or AI tools in the process of looking for home buying information. So that is something that is new in the last year. So you think about how much I know we're always talking about being on the precipice of some like major change, but this is the biggest, and I think that it's going to change the way that we relate to technology, information sourcing, and the home buying experience.
Kristin, my daughter just turned 12. She asks Copilot. She has a PC, so she asks Copilot. I'm going to guess a dozen questions a day, just to see. She'll be watching TV, see something, and I can see her doing something. I'm like, "What are you doing?" I'm asking Copilot about this. I'm asking Copilot about this. So, like, whether it's GPT, Claude, Copilot, like, I think
Me
you're exactly
too.
right. This is where, and it'll be hard for those tools to push back. For now, they don't advertise. It's going to be incredibly hard for them to turn down that revenue such that it doesn't just become another SEO scenario. But it is where everybody goes now almost first. It's like YouTube and AI, chat AI bots are the two spots.
YouTube was the next like biggest thing whenever you look at like where people go for information. It was top of the list. I think it was like 60% or something. So really interesting to see how people are shifting. I mean, YouTube was really high last year as well. And I think, and then forums. So I also think that's really interesting to think about. Like, we're not just going to experts. In fact, experts are really low on the list whenever, like when it comes to trust, which is a little bit different of a conversation, trust versus where you go for information. But they want to see forums, they want to see what other people are doing, and then also it's just a multitude of sources.
Are we seeing examples, Jeremy, in terms of the consumer-facing AI tools that you think that have been done really well in the mortgage industry already? Does anything come to mind?
I think the biggest easy win for most companies that I talk to is a chatbot. When you have these kind of one-off questions or frequently asked questions that had typically become an email or a text to the loan officer, can very easily get solved with probably most of these, Robbie, have like a human name to them. It's like It's
Sure.
like Bob or Sarah or Allie or whatever that they named the AI, but it does work, meaning it lowers the cost to your point, and it's a question that isn't rising to the level of locking your loan or talking about debt outcomes and talking about 30-year life plans. So that's been the biggest deployment. Almost everybody's got one, and it's been successful.
I don't agree. I don't agree because like the company is liable for whatever the chatbot says, and so I don't think
Sure.
that the chatbots are quite at the point where, are you saying they've limited the chatbots so that they're not discussing any things that they shouldn't be?
Yeah, exactly. Like I think it's basically your policy guides. It pushes you back to the digital experience or pushes you back to can I get you in touch with someone right now type of stuff. And it's mostly those, like I said, frequently asked questions that you could easily Google. And instead you go to your loan officer, you go to this my account page, which is what everybody wants the behavior to be, but you're able to answer those. So Robbie, think of it this way, like the definition of jumbo or adjustable rate or what down payment options do I have? What is PMI? Stuff that maybe either is just ahead of your conversation with an LO or they forgot and they just go back to like quickly check. It's stuff like that.
Makes
We
sense. That's
should,
it.
oh, I was just thinking we should add that to First Home IQ's library, like something, we're looking at how to incorporate AI into our experience for, yeah, like on the education side, and just having the like training it with the specific information we have versus nothing that would like go beyond that. But I think that could be really helpful. So.
Yeah, agreed. I think, Robbie, to your point, one of the areas of risk that I did just think of is there are outbound voice AI bots now that try to get the consumer on the phone and do an immediate transfer to the loan officer. That would be an example of now taking the next risk up that you're having. It still isn't a real conversation about the terms of a mortgage, but it's like, why have my LO wait through 7 rings to see if they get the person or they get voicemail? Just have a bot see, and if somebody clicks in, I'm going to get you to Robbie right now, boom, it's like over. It's not great, but I'm saying like that is the next step a lot of like digital and call centers are going to. We'll see how consumers react to that, but it's definitely a cost savings to not have your LOs just waiting to see who picks up. You just have a bot wait to see who picks up and then
That's
click it over.
exciting to talk about. I'm gonna miss my flight, so I'm gonna cut us off here. But Kristin, can we tease some of the data that we'll probably talk about next month? Any cool
Yes.
findings that you're like, yes, I'm there.
Yes, I shared a little bit, but some of the areas I'd love to get into that would continue this conversation is around sources. 40% of Gen Z report using social media for homebuyer information. I mentioned the 66, it's actually 66% use YouTube. We talked a little bit about AI. The trust factor this is like kind of rough, but 20%, only 20% trust loan officers to help them make smart decisions about their mortgage. So I've like looked at all of this to see what's going on. And I do think it's kind of this shift. Like they're not just going to the expert, they're going to AI, they're going to, different sources of information. And their confidence in themselves is remaining around the same, but it has dropped a little bit too. So anyway, lots to get into,
Yes,
and
totally.
we'll be releasing this March 3rd, but we'll talk about it on our next session too. So.
Very excited for that.
Great stuff.
Thank you, Jeremy, for coming on and having this discussion with us. I'm sure we could talk about it for hours. But it's always, I feel like the three of us, it's always good when we get together. A lot of enjoyment.
You're welcome. Great to be here. Great to see you, Kristin,
Yeah,
and
so
good
good
to see you,
you,
Robbie.
Jeremy.
Yeah,
Thanks,
talk
Robbie.
soon.
Thanks, everyone.